Welcome back to Dr. Finance. Some of you may have wondered when you were taking my international finance class, who invented the double entry bookkeeping system for national income accounting? And that is Richard Stone, who won the Nobel Prize in Economics in 1984. And this is, I present you two papers. One is the seminal paper he wrote with his teacher, James Meade, who also won the Nobel Prize in Economics much earlier. And the title of it is The Construction of Tables of National Income, Expenditure, Savings, and Investments, where they define all those table items. It was published in the Economic Journal, 1941, but I'm going to spend much more time in Richard Stone's sole authored paper, which was published in 1942 in the Economics Journal, titled The National Income, Output, and Expenditure of the United States of America from 1929 to 41, because this is much more, applied to the United States case, and then it's more intuitive. And so let's go the first paper, only the introduction part. The Construction of Tables and National Income, Expenditure, Savings, and Investment. Introductory. The national income may be defined in a number of different ways. Differences in definitions, which are all too infrequently given with precision by writers on this subject, may lead to great confusion in economic discussion. It is the purpose of this paper to show that the construction of balance sheets of national income and expenditure clears up some of these problems of definitions and provides a powerful statistical instrument for the cross-checking of various methods of estimating the national income. Such tables may serve two further useful purposes. First, they make it possible for the statistician to provide estimates of the national income and expenditure in the various forms which are most useful to the economist for the elucidation of many economic problems. Secondly, if a form of tables of this kind could be generally accepted, international comparisons of national incomes would be greatly facilitated. Table A, B, C, D, and E are suggested outlines of the fundamental tables which serve the dual purpose of presenting the estimates in a form which is of most interest to economists and which enables the maximum amount of statistical cross-checking. And section 2 and going on, they explain the tables A, B, C, and D, item by item. Table B, C, D, and they actually present that table in the appendix, as you see. Now I move down to the next paper, titled The National Income, Output, and Expenditure of the United States of America, 1929 to 41. The Economic Journal. Chapter 1. Some general remarks on the American estimates. The purpose of this paper is to present the published estimates of income, expenditure, savings, etc. in the United States in a form which, as far as possible, is comparable with the official estimates of this country. The work is mainly based on recent figures published in the Survey of Current Business, though other sources have been used where necessary. I have confined myself to data already published and have aimed at presenting the data in a comparative form. Two results arise from this. First, while the general form and, as far as possible, the specific details of the two sets of estimates are comparable, allowance must be made for the fact that there are innumerable possibilities of minor discrepancies. In the absence of the fullest details of the two sets of estimates, it is impossible to be aware of the quantitative importance of all these, let alone make adjustments for them. Accordingly, although in a general way the comparison is probably reliable, the possibility of differences of definition should be borne in mind if small component items are to be compared. Second, the form of presentation adopted here differs from that followed by the United States Department of Commerce in setting out their calculations. In the recent estimates in the Survey of Current Business, the concept of gross national product at market prices is used in preference to that of the net national income at factor cost. The difference between these concepts is simply the sum of depreciation allowances and indirect taxes, and I do not wish to suggest by the form of presentation adopted here that one concept is right and the other wrong. Which is chosen is a matter of convenience, and it depends partly on taste and partly on the problems to be solved. At the same time, I find the Department of Commerce's definition of national income rather inconvenient. The point of difference between this national income and concept and the net national income adopted here can be seen as follows. The figures relate to 1941. National income, net national income, social security contributions of employers, federal debt interest, less imputed rents on owner-occupied houses, corporation income and excess profit taxes, capital outlays charged to current expense, inventory revaluations, national income. Now, I do not wish to discuss these differences in detail, but it seems to me that the exclusion of number 5 and 7 in particular is undesirable in a measure of factor incomes. The exclusion of 5, corporation income and excess profit taxes, involves these taxes being treated as indirect taxes. In times of war, when excess profits taxes reach a high level, this treatment involves an apparent shift of earnings away from propensity, which follows statistically solely from the method of tax collection. It is not easy to withdraw the best line between direct and indirect taxes, but I am sure that this line is not a good one. The exclusion of 7, inventory revaluations, means that investment in stocks is measured by the incremental value and not the value of the increment. Stocks are thus treated differently from fixed assets, investment in which is measured by the value of the increment. It will be seen from the following tables that the American data make possible an analysis more complete in some respect than the one given in the British White Paper. Thus, in Table 5, the identity between the balance of payment and the foreign investment is presented in a way which brings out the influence of foreign buying in generating incomes in the United States. Table 6 shows in a similar way the influence of domestic expenditure in generating these incomes. In connection with Table 2, it is perhaps of interest to note that a comprehensive investigation was made into the distribution of consumer incomes for the 12-month period, July 1935 through June 1936. The figure given for the total net money income plus the value of certain items of non-money income, such as the occupancy of an owned home or food produced by rural families from their own use of families and single individuals, with the exception of 2 million persons living in institutions or quasi-institutional groups, was $59.3 million. At the time, this figure appeared reasonably in line with estimates of income paid out, but more recent data on personal incomes, see items 48, table 2, suggests that this figure is somewhat too low. No doubt, a part of the discrepancy can be accounted for by differences of definition, and it would be interesting to see a reconciliation of the two sets of figures. It will be noticed that in the table that follows, as in their British counterpart, some items are obtained by difference. For example, this is the case with expenditure on non-durable consumers' goods and services in Table 1 and personal savings in Table 2. It is stated, however, in another article that the National Income Unit of Division of Research and Statistics is now engaged in preparing comprehensive direct annual estimates of consumer expenditures by measuring the flow of commodities and services passing to consumers, and can be seen from the note on item 52 of the following tables. Some direct measurement has already been made of the flow of personal savings. When this work is complete, it would appear that there will be some degree of statistical check of the totals of the tables. In the case of Table 1, it seems that the first two columns are not statistically independent and do not therefore check one another. How independent column 3 will be is not clear, but if there is a large measure of independence, it must be worthwhile to revise the items in the light of the new information provided by the inner relations of the variables. A forthcoming article by the writer in company with Mr. D.G. Champernone and Mr. J.E. Meade will suggest a method for using this information. It is clear from the articles mentioned above that work is proceeding apace on the American estimates. It is desirable, therefore, that account should be taken of revision appearing in issues of the Survey of Current Business for months later than May 1942, if these figures are to be used for any specific purpose. The set of figures, which in particular may be considerably amplified, is that relating to public authorities, see Table 4. At the moment, neither government income from property nor subsidies enter explicitly into these tables, and it is not altogether clear how it would be affected by their inclusion. There is one addition to these tables which would be of great value to economists, namely a table reconciling net investment at home and abroad with changes in appropriately valued direct estimates of this stack of capital. In view of the importance in theory of the partial relation between net investment and the stack of capital in existence, it would be a gain of estimates of these two variables could be made available on a common logical and statistical basis. Chapter 2. 3 comparisons with the progress of war finance in the United Kingdom. The figures given below in the United States cover the 4 years 1938 to 41. No attempt has been made to use the figures of calculated requirements for the fiscal year 1942 to 43. Since these figures are not forecasts and were made some month before the beginning of this fiscal year, it is not, therefore, to be expected that the final ratios which follow will be numerically similar to the comparable British figure in 1941. It is only in 1942 and 43 that America's war effort will really get into its stride. The following analysis of the proportion of resources absorbed by government expenditure can be compared with that contained in the section B, page 4 of 6347. Now, we go all the way down. The analysis in section B leads to the following percentage for the United Kingdom. As stated in the first part of this paper, great care must be taken in interpreting the comparison of individual items, which, though they have similar titles, may have somewhat different definitions in the two countries. The following notes will help to allow for certain sources of error in the above comparison. First, purchase of land by public authorities from the private section of the economy is excluded from item 3, though it is included in the similar estimates in 6347 CMD. See note to items 8C. It is unlikely, however, that this item will make much difference to the comparison. The treatment of subsidies might perhaps be more important, but as stated above, this matter is at the moment rather obscure. Second, item 4 has been adjusted by the inclusion of imputed rents. Third, it is assumed that the whole of the category, all other business taxes, item 5 of this table, see note to item 36 below, fall specifically on consumption goods and services. This is no doubt not quite true, since some of these taxes will fall more or less generally on output as a whole. The effect of this assumption is to raise the ratio shown in item 8. 2. The following analysis of the proportion of the national income devoted to taxation can be compared with that contained in section E of CMD 6347 in $billion unit. National income, direct taxes, indirect taxes, total tax payments, and total tax payments as a percentage of the net national income. Since taxes here, with the exception of corporation income and excess profits taxes, are on a payment as opposed to an accruals basis, it is probably best to compare item 5 above with the ratio based on tax payment figures in the UK, comparable percentage based on the data in CMD 6347 are 1938 to 4137. For certain purposes, it is more appropriate to add transfer payments to net national income so as to obtain a rough estimate of taxable incomes. The percentages then become the United States and the UK, the items mentioned here. In comparing these proportions, it should be borne in mind that war risks, insurance premiums, and War Damage Act contributions and premiums appear in the British figures, and that no subsidies are deducted from indirect taxes, etc. in the American figures. 3. The sources of war finance in real terms. This analysis must be regarded as especially rough and is only intended to show the broadest orders of magnitude. Nevertheless, if substantially correct, it will give some indication of one important difference between the two countries, namely the much greater possibilities of expansion of the American economy. The following table can be derived from the data in Table 1 below. 1938 is not included since it was a year of considerable depression in the United States and not therefore very suitable as a base year. In order to convert these estimates in terms of 1939 prices, I propose to use the limits set by the movements of A, the cost of living index, and B, the index of finished product prices. I am conscious that this will result in a very crude analysis, but I think it will be adequate for the purpose in hand. The movement of these prices relative to 1939 has been as follows. Cost of living index, index of finished product prices. From these data, the following table can be compiled, showing the changes in real terms between 1939 and subsequent years as a percentage of the net national income at market prices in 1939. The change in real terms between 1939 and the subsequent years as a percentage of the net national income at market prices in 1939. 1940 and 41, increase in government expenditure on goods and services, 1 and 9 to 10%, right? Increase in output of goods and services of all kinds, i.e. net national income. Decrease in personal expenditure on consumption. And decrease in net in investment at home and abroad. The figures in italics are negative. No analysis on these lines has been made officially for the United Kingdom except for the decrease in consumption. In section C of CMD 6347, it was suggested tentatively that the fall in real consumption between 1938 and 41 was probably of the order of 15 to 20%. This is equivalent to a statement that the fall was between 11 and 15% if the net national income of the net national income of 1938. A more comprehensive estimate has appeared in The Economist, which gives the following percentages for the changes in the items between 1938 and financial year 1941 to 42 compared with the net national income of 1938. Increase in government expenditure on goods and services, 55. Increase in outputs, 12.5. Reduction in consumption, 14. And drafts on capital, 28.5. Without going into the statistical basis of these estimates, I shall assume, as seemed reasonable, that they are sufficiently accurate for very broad comparison. The main fact, which emerges clearly even from these rough figures, is the difference in the estimates of increased output, some 12.5% of the 1938 level between 1938 and the financial year 1941 to 42 in the case of United Kingdom, and between 23 and 29% of the 1939 level between 1939 and 41 in the United States. This large increase in American output is mainly to be attributed to the comparatively low level of the employment of resources in that country, even at times of good trade. The level of unemployment has been high in the United States for many years, and average hours of work have been sufficiently low to allow considerable rise in output through their increase. Thus, between 1939 and 41, civil non-agricultural employment is estimated to have increased by some 4.3 million, or 12%. While in the latter year, there were still some 4 million workers unemployed. Over the same period, average weekly hours in factories increased by 2.9 hours per week, or nearly 8%. Another factor which affects this calculation is the difference in the size of the armed forces in the two countries. The latest figure available for the United States puts military and naval forces at a little over 2 million. In November 1941, in relation to the size of the population, this would compare with a force about 750,000 in the United Kingdom. I do not think that any secret will be disclosed by the suggestion that the armed forces of this country had reached a figure significantly higher than 750,000 by 1941. On the other hand, it is important that this factor should not be overestimated, since in the income and output statistics used here in an allowance is made for the value of the services rendered by the armed forces. Richard Stone, London. Thanks for listening.